We're standing by this afternoon to find out the latest decision by the Reserve Bank. Markets leaning towards an on-hold decision for December. Business Editor Ross Greenwood is with me. And Ross, November has historically been a month when the RBA moves rates. Why not this month?
Well, this month, of course, they've now got a little bit more evidence about inflation and perhaps moderating a little more quickly than what certainly the markets expected and maybe even the Reserve Bank itself. The last monthly inflation number last week came in at 4.9%, which shows inflation is heading in the right direction. And even though many might have expected another rate rise today, really it was a situation where it just gave a little bit more time for the Reserve Bank to pause. So broadly, both financial markets and also indeed economists generally think that there is probably no rate rise today. They'll now sit and wait and look over the Christmas period and just see what consumption is like. Now, there's some anecdotal stuff out there that some spending is still strong. Say, for example, today car sales have come out and they're going to be at their strongest level ever. And so this is the key that the Reserve Bank will be considering as it considers these interest rate rises or indeed whether there be no more rate rises as is predicted in America. You can see also here we're waiting to stand by to the Treasurer. The decision should be dropping anytime soon and as expected interest rates are on hold. So the cash rate from the Reserve Bank is steady and will remain at 4.35% for the time being. We'll get some reasons for you and also get money market reaction very, very shortly. But just to repeat, interest rates today on hold for the month of November, and we can just see here very much what's taken place over the last period of time in regards to really where interest rates have come. 15 interest rate rises over the past 18 months, and that clearly is the key that a lot of people are starting to feel a pinch with, especially those people who have mortgages, Kieran.
And as you said, Ross, we're standing by to go live to Jim Chalmers this afternoon. You would imagine a bit of relief that in the government, you know, that they say the RBA is independent, but another hike before Christmas, politically, that would have been a disaster. Give us a bit more of the context, the reasons for why the RBA has made the call to pause in December.
Okay, so what we can see is from this statement, we're just sitting here and they've remained with a statement that they had previously. The board remains resolute in its determination to return inflation to target. So as you go through this statement, you just go a little bit further in there. They're basically saying returning inflation to target within a reasonable time period remains the board's highest priority. Now, they're saying that higher interest rates are starting to work in our economy to cool things down, but where it sees demand, strong demand in our economy, and it might be in housing prices, it might be in the resilience of people to be able to cope with it. And Michelle Bullock, the governor, remember, got into big trouble by basically saying most people are coping at the moment. But the fact of the matter is most people are coping because they've got jobs. And even though the central forecast is for unemployment to rise over a period of time, even this statement today says, you know, they're having some difficulties in seeing what the outlook is like into the future. And this has been largely put as a result, in particular, of the increase in migration to Australia, with 500,000 people coming this year, a forecast 500,000 next year. That's adding to demand because when people arrive here in Australia, they rent houses, pushing up rents, and also quite clearly consume goods to get themselves set up here in Australia.